Thanks so much for tuning into the trade setup. I'm Neeraj Shah, and it's crucial the next couple of days simply because we have a bunch of very important things lined up. None more important than the Fed decision tomorrow. Now, keep in mind, based on all that I've read, my assessment is that because the US economy is growing stronger and the inflation risks are building, I think what we are very likely to hear from the Fed tomorrow is that they will end the taper sooner rather than later. And therefore, this then paves the way for the Fed to be able to take or point towards faster rate increases, maybe give the dot plot the leeway to have a couple of rate rises in 2022 itself, Omicron permitting, of course. I think some people are divided on the point that if the Fed sounds too hawkish right now, but then Omicron comes and hits the economy, US economy, then it might all be for nothing. But I still reckon that this is how it will shape up. This is based on all the readings that I've done and a limited understanding that you can have based on all the previous conversations that the Fed has had. This is the first official hawkish commentary that we are likely to hear from the Fed, if you will. So keep that at the back of your mind. This is the most important thing. And I think ahead of that, it's very unlikely the markets will do something substantial. So the US markets yesterday ended lower. Tech in particular got hit, but Dow, S&P, NASDAQ, all three of these came down in the session yesterday. So no surprises really when it came to the US markets performance. And the futures, as we see, are trading mixed to marginally lower. There's this wonderful chart on a Bloomberg story that we'll bring to you, and then we'll show you what the SGX Nifty is doing as well. So keep that at the back of your mind. But let's get the chart up on the screen. This shows you how the markets are probably a lot more hawkish than the Fed is, because the pricing indicates a higher Fed rate than the consensus FOMC forecast. The question only is, as I said, does the Fed go out and indicate almost, not openly really, but almost surely that there will be a quantum of 2 rate hikes in 2022. Asia would be sedate. SGX Nifty, I reckon, will be not showing something materially green. It's virtually impossible to believe that we could have any kind of a start which is indicating a fair degree of bullishness, despite the last 2 days of there being some bit of a pullback. So this is how it is likely to be. And frankly, if you look at their movie function and try and assess what happened in trade yesterday as well, you will probably understand that the markets were skittish. Some of the high-flying counters came off, largely a bit of sluggishness. The advance decline ratio also looking slightly wobbly. And I would suspect that it is, I'll be really surprised if the markets have a really large green candle in the session today, or the broader markets have a really positive momentum ahead of the Fed decision. So let's see. It'll likely be quiet as she goes. So we will get to, of course, know about the Fed decision tonight, and therefore maybe tomorrow, if there has to be a decisive move, it'll probably happen tomorrow. Now, skepticism is palpable, and the trade setup is precisely that we are unlikely to see any large, either positive or negative, maybe build up ahead of the Fed decision. Bank Nifty remains the weak link. We've been talking about this for a while. The FI selling continues incessantly, and that continues to bog down the Bank Nifty. I think FIs, as Atul Suri was making a point in Talking Point yesterday, FIs have a net overweight position and banks, independent of what the index weightages would be. I think all of that is coming to the fore as FIs continue to sell the Indian markets, because I would really suspect that the quantum of selling that we've seen thus far, $1.5 billion in December, that would be purely an emerging market dedicated outflow. This is India dedicated flows also likely seeing some bit of profit booking. And domestic dealers might be buying at lower levels, but Bank Nifty remains the weak link. And some smart money is starting to now sit on the sidelines. For the longest time, I've heard some of the smartest money saying that, oh, we are 100% invested, and some people still do. There's a shade of people who were earlier sitting on 100% cash, or who were not sitting on cash, who were fully invested, now starting to say that despite the markets having corrected already a bit, we're still starting to sit on a bit of cash because there's a bit of an uncertainty coming ahead. Let's wait and watch what happens. By the way, Accenture numbers are tomorrow, and therefore technology is the other pocket that probably would remain in focus. Just keep in mind that big tech typically tends to cool off a little bit if the Fed indicates a Fed rate hikes, and therefore difficult to play technology in the current juncture. What about stocks to watch? I would watch out for Paytm. The anchor lock-in opens today, and therefore Paytm remains that big draw to watch out for. Remember, typically when the anchor lock-ins open, stocks tend to correct quite materially. We've seen that happen with a number of stocks. You could argue that maybe even Nykaa has gone through some bit of that, but be that as it may, you see an anchor locking opening, and you see stocks typically tend to cool off a little bit. It'll be interesting to see if Paytm, which of course hasn't had a big bang start any which ways, but with the anchor book lock-in opening today, would Paytm face the wrath as well? I think today we'll get to know. Very likely it will happen, by the way, viewers, if not today and over the next few days. So please keep that at the back of your mind. Deepak Nitrite, it's an interesting announcement. I would suspect that the markets will not like it, because typically you don't like companies which are going out to the market and diluting. And Deepak Nitrite having a significant portion of cash on its books, it's interesting as to what the management is saying, that they are going to meet on December 22nd to consider raising of funds by virtue of a QIP. Now, the bulls or the people who are positive or look at this positively will also argue that the company is finding more avenues to invest in. A really smart investor told this to me, that maybe the company is finding more avenues to invest in than the cash that they're accruing, and that could be viewed positively. They're investing for future growth. The promoter holding is only 45%. The fact that they're doing a QIP either means that they're finding something which requires urgent cash, which the cash flows can't quite live up to. But usually markets like companies which don't go out and dilute too much. Let's wait and watch how the market takes this. Vodafone Idea, they've paid about 1,500 crore dues to IDFC First Bank. Positive for Vodafone Idea. Positive in a small way for IDFC First Bank. I would suspect the markets would take this more positively for Vodafone Idea. Let's wait and watch what happens to this one. Is doing some reading on the RBI's PCA framework for NBFCs that got announced. I think CRISIL's summation was pretty interesting. They're saying that this PCA framework for NBFCs will be effective from October 2022. So there's ample time. They don't expect any mid or large CRISIL rated NBFCs to face immediate challenges given the comfortable capitalization levels. And the RBI has also provided for a reasonable transition time. So maybe even if an NBFC is challenged, I think there is adequate time for them to meet the criteria. So therefore, should not be a problem. I think there's a Phillip Capital note which says that none of the NBFCs under their coverage, except for M&M Financial, which has a net NPA of 6.4%, breached the threshold. But even M&M Financial is breaching the threshold by just a very small margin, and therefore no impact on their coverage in NBFCs. This is CRISIL, of course. What I just said was the Phillip Capital note. So effectively, while you hear a lot about the RBI's PCA framework for NBFCs, most notes say that there's no material impact. So kind of let it be a non-event, so to say, at least for now. If anything, from a trader perspective, M&M Financial is that one stock, but trust me, viewers, I mean, 9 months is a really long time for an NBFC to manage its levels in a way that it doesn't have to go through any kind of issues. So I think M&M Financial will comfortably manage that. The CLSA note on ITC, because ITC is your trader favorite stock. I thought I'll bring to you the views post what ITC's analyst meet was. So one note, and I thought CLSA was good enough to bring that. So they made it a buy with the target price of 275. They're saying that the company is now open for alternate structures in hotels and infotech businesses. The FMCG value unlocking remains focused even with the possible demerger, and they expect to soon ascribe value to the infotech business. Now, sum of parts story for ITC. Let's wait and watch. If they indeed go about and do any kind of a demerger, as and when it happens, there could be some positives. Do you want to really bet on that? Is the question you got to ask yourself. For the longest time, it's been a story that it will play out. Haven't quite seen it play out really. And that tells you a story, isn't it? ITC goes up on expectations and then comes off very, very strongly. Just be careful if you're trading this one. By the way, sugar stocks may also react in the session today. That's the other pocket in focus because of the whole WTO finding issues with India subsidy. India is going to, of course, appeal and all of that. Maybe there could be a bit of reaction, but I think from whatever little I have read in the recent past, the exports are competitive even without the subsidies. Be that as it may, Subsidies are good for companies. If they're not happening, maybe there could be a bit of a negative reaction, but let's wait and watch. Now these companies are fast turning into more ethanol plays, but sugar still remains the dominant force. So I would suspect that sentimentally there could be a bit of a hit to the sugar companies in the session today. So do watch out for that as well. Last but not the least, before I wrap up, just this very interesting chart about what 2022 might hold in store. And there's a Bloomberg survey done, 106 asset managers, asking what's the biggest downside risk to their main scenario. And most fund managers out there, a large percentage said that runaway inflation and tapering or a policy mistake is the biggest concern. Very few people believe that the pandemic and the new variant is a big thing. So while we may get bogged down by noise around Omicron and Omicron related issues, most people believe Omicron is something that is easily digested. Geopolitical risks are always there and therefore easily digested. The biggest issue as per what people believe right now is runaway inflation and a tapering or a policy mistake. Also keep in mind, viewers, as I wrap up, most corrections come in because of a reason that is least anticipated. So that's the problem with surveys. They give you the mindset of the best minds. The market usually reacts to something that people are not anticipating. Thanks so much for tuning in. Have a safe, profitable day ahead. If you're stepping out, please stay masked up.